Most traders think to actually become consistently profitable that it takes years on years. And while in certain situations that can be true, it doesn't always have to be. One thing I'm very thankful for is my time and experience in the market. I have seen the market pre-COVID, during COVID, post-COVID, high interest rates, low interest rate, independent Fed, not independent Fed, Trump presidency, Biden presidency. I've seen a lot of different things. And I've been in your exact shoes before. Now today, I'm going to show you guys how to use my first candle rule. Ultimately, so you guys are able to trade with more clarity, reduce your hesitation, and stop making a lot of mistakes that many beginners do. Let's get into the good stuff. Let's get the basics out of the way. What even is a candlestick? First off, a candlestick is actually composed of many elements, but the beginning is two parts, the wick and the body, okay? A lot of you guys have seen candles just like this one. Now, this candle specifically is a green candle. This green candle is telling us a lot here, okay? This is how you read it, okay? The body is the thick part, this part here in the middle, the thick portion of it, okay? Now, the way that is actually where price opened and closed in whatever respective time period. Remember, this candle here measures a unit in time, whether it's a 1 minute, 5 minute, 30 minute, 4 hour, or 1 day. This represents a unit of time. So the body is exactly where it opened and closed within that time period. Now, the color is what tells you what part is what. So this is a green candle here, meaning the bottom of the body is where it opened. The top of the body is where it closed. So since the close was higher than the open, it is a green candle. Now, those little things at the top and the bottom, those are called the wicks. Now, what the wicks represent is the high and the low of a candle. So the body shows you the open and the close, and the wick shows you the high and the low of the time frame. So if this is a 5-minute candle right here, the wick represents my low of the time frame, my high represents my high of the time frame, and my body represents my open and close in that 5-minute time period. Right now, if this candle was red, it's similar, but it's telling a different story. Now, the high and the low of the wicks are still the same, except now high is here, low is here, but now the body's telling a different story. Now, our open is our top of our body, and our close is the bottom of the body, because it ended up printing red, meaning downside movement. Now that you and I are on the same page here, a lot of traders actually aren't trading to win. They are trading with the fear of losing. And there's a big difference between those two things. If you've ever blown an account or hesitated to enter a trade, moved your stop loss, or even exited early simply because you didn't trust yourself, including that tension you feel in your chest when you click buy or sell, that is not a fear of losing money. You've already lost trust in your own execution. You lack confidence going into the market, and that's the easiest way to get destroyed. And worst of all, when you don't trust yourself and you lose your confidence, you hesitate. You're overanalyzing, you're chasing trades, and you're switching strategy to strategy. And ironically, the harder you are trying to not lose, the faster you do so. The whole point isn't to just hope and pray that price goes your way, or allow your emotions to take you high and low depending on the outcome of your trade. The goal here is you need an easy, identifiable, and easily repeatable process. That way you can eliminate the need for the emotions. Now listen to what I just said. The key words there were easily repeatable and easily identifiable. What do I mean by that? Easily repeatable means it's not too complex with a million indicators and a million different things on your screen where you can't even really read exactly what's going on. It's clear cut so that when you see it, it's easily identifiable. Easily repeatable is simply put, it's not too much execution, it's not too much preparation, it's just the right amount of balance. That way you can prep for it, you can execute it, and you can repeat it. Simply put. Remember, real traders know that growth and profitability comes from small, compounding, sustainable gains. What exactly does that mean? Basically what I'm trying to say is you're not going to take one trade for 30,000% and change your life in 45 seconds. But what you very much can do is come to the market every single day with conscious preparedness, execute your plan perfectly, and you can get a very effective trade daily that you not only know is repeatable, but easily identifiable, and watch where that takes you in 6 to 12 months. To break it down even simpler for you guys, let's do some math here, okay? On my calculator, let's say you have a very decent average paying job. Let's say you're getting $30 an hour, which is above minimum wage here in the United States, okay? So if I'm working 30 hours a day, if I get paid $30 and I'm working 8 hours a day, I'm getting paid $240. Now remember, I don't even see all 240 of this, but that means I only need to make $240 daily from my 9 to 5, 5 days a week, to be able to replace the income. So believe it or not, that's 12% on $1,250. And 20% is repeatable every single day. You know how I know? Because I do it every single day for the last 8 years. So think about the comparison here. Would you rather work 8 hours at your job every single day, or work an hour in the markets preparing, executing, and repeating the process? You tell me. Even better, what Mind Over Market is built on is why can't we do both? You can do this and have this depending on where you live and how dedicated you are to really escaping the rat race. Well guys, with all that being said, let's get back on track here. The 1 candle rule. The strategy is actually very simple. Trade the first candle of the day, capture the highest and most momentum, be in and out of the market very quickly. My strategy actually doesn't even require for your capital to be at risk for more than 10 minutes. You're talking 2 5-minute candles. I'm normally out on the first one. Now, if you guys want to learn more about this specific strategy in depth, be sure to subscribe down below. Basically, what we're doing is here. If you look at this pre-market structure here, okay, we look at for our highs and our lows. Of course, normally, price usually tends to trade and open between this range daily, right? Sometimes we'll open in the midpoint towards the high or the low of pre-market. But here's the setup, the 1-minute candle rule. As we print our first candle, and let's just say, for example, we get a bullish candle print off of open. Candle begins to rapidly increase and start to test our pre-market highs. Well, this is where the 1 candle rule comes in. As soon as market break structure, aka our first candle, prints above the highest body close in pre-market, which is this right here, as soon as we break that level, you are entering the position with confidence, okay? So if price is at $100 in pre-market and we are breaking our pre-market high at $100, I'm going to take the 101 calls on this underlying asset as soon as we break. Now, the key element to this is I am trading 0 DTE contracts. For those of you guys that don't know what that is, that's basically an options contract that expires within the same day. Meaning, we are starting here between pre-market and open. This is where the contract starts, and it's rapidly decaying the entire day. So by the end of here, between open market and extended hours trading aftermarket, the contract is now worthless. So the entire day, it is decreasing and basically getting a theta decay the entire day. Now, it usually only begins after the first hour. So if you're capitalizing on the initial movement, you can play off of it without worrying about the theta decay, aka the first candle rule. Here is one thing I will tell you guys, because what is a trading strategy without the opposite of it? The downside, the risk here. The key here is proper risk management, okay? Make sure you are trading with a proper 2-to-1 risk to reward ratio. What that means is if I'm going to risk $100, make sure it is for a $200 gain, because you don't want to be able to get stopped out at an equal split, and or you don't want to do something crazy and chase like a 5-to-1, because those don't always present themselves in the market. The way that I like to do it is I like to do 2-for-1 risk to reward ratio based on a 20% gain of that 0 DT contract. So I am risking 10% to gain 20%. So if I go in with my normal position size of $10,000, I am risking $1,000 to earn $2,000, because on a 0 DT contract, which I hope all of you guys come to learn, 20% is very achievable every single day. Again, I've been doing this for 8 years. I've seen it, I've lived through it, and I preach it every single day in my lives in the Mind Over Market inner circle, and you guys get to see it here firsthand. I know what all you guys are thinking. Easier said than done, right? Well, if you're a beginner, let me explain something to you, okay? Absolutely, it is easier said than done. Sure, I just spent the last couple minutes showing you and making it seem like trading like that is extremely easy. But the last thing I am here to do is to sugarcoat anything. I actually pride myself on being very transparent with realistic expectations. Now, what do I mean by that? This is not something that comes easy. It requires a lot of consistency. It requires even more discipline, and the number one thing that most people try to rush, and that is simply time in the market. When you're a beginner and you're not familiar with something from a visual perspective or an execution perspective, getting reps and actually being involved in it is always the number one way to learn. Now, I'm not saying to go out and start live trading and risking all your money without knowing what you're doing, but what I'm simply meaning is the right preparation and the right system to get you to where you need to be. The overexposure to information kills you. I don't sugarcoat stuff. I'm very transparent and I set realistic expectations. Everything that's valuable is out there on the internet, but I think the number one thing that's invaluable is having a proper mentor and coach guiding you along the process, especially when you're learning and you're beginning, because it avoids developing bad habits and it actually allows you to spend your time on the useful information and not the non-useful BS that you see marketing through social media platforms or even through other YouTube videos. The number one thing that I pride myself on is availability. Within my Mind Over Market inner circle, I am live personally over 10 hours a week, where we have time to actually discuss and banter about the market through live trading sessions, Saturday classrooms, and weekly Q&A sessions. Enough of this talk. We need more action. If you guys think that you're a fit to join the Mind Over Market inner circle, where we not only have proven systems, but proven profitable traders, click the link down below, apply so we can see if you are a good fit for the Mind Over Market system and to be able to trade and learn from me directly one-on-one. Thank you guys again for your time. Be sure to like and subscribe down below. If you guys are looking to get more content directly from me across trading and my lifestyle, catch me on Instagram, TikTok, and X. And besides that, guys, I hope to see all you guys very soon. Stay profitable, traders. I'll see you next time.